Alrighty, guys, let's go ahead and get started with our weekly outlook for the week. Thank you guys for joining me on this Sunday or Monday, depending on where you guys are. Today is the week of December 3rd or December 4th if you happen to be in Australia like myself. If this is your guys' first time hopping on to a weekly webinar, appreciate you guys being here. I host one of these free weekly outlooks just about every single Sunday that I can for you guys for free to give you guys my outlook and bias of the Forex markets and these pairs over here to the right side of your screen that you can see for the upcoming week. Now, my disclaimer as usual, guys, this is for educational purposes only. Please do not be placing any trades 100% based off of my analysis. Please use this analysis in combination with your own analysis to be placing your own trades. As you guys know, we are not right 100% of the time. My track record, my verified track record, has a history of about a 75 to, I think it's exactly like 77 or 78% win rate right now. So there is going to be that 20 to 25% of the time that we are wrong. And that is across the board for all professional traders, guys. There isn't a single professional trader out there that is going to be right 100% of the time. It breaks down to risk management and risk reward with the trades that you place. However, that being said, guys, let's go ahead and jump into things. The only announcement that I have to make is our prices did go up as promised, guys. We have been setting this expectation for a couple months now that our prices were going to go up. I gave everybody well over a month of notice before our price went up. So if you would like to join the premium group, you can shoot over to our website, positivetraders.us. And you can see our new pricing on there. Our lifetime membership has gone up from $4.99 to $9.97, and our monthly membership has gone up from $69 a month to $97 a month, guys. So we weren't joking around about the prices going up. We've gained a lot of credibility. We've broken just about 400 members in Positive Traders. I've been successfully running Positive Traders for over a year, almost a year and a half now, or actually a little bit over a year and a half now. So just to give you guys an idea of why it went up, that is why, as we build credibility, we can build value out of our service, and it's just going to continue to go up over time as my track record gets longer, as we become more well-known and become more credible on social media and offline around the world as well. So also, if you guys are in the beautiful Australia, if you guys are anywhere near the Gold Coast, I would love to link up and meet up with some of you guys. I got a chance to meet up with some of you guys over the weekend. So if you guys are out here, please shoot me a message. But let's go ahead and get started. First off, let's go ahead and look at our economic calendar for this week. It is a pretty light bag this week in the markets as far as the economic events are concerned. This morning, or this afternoon, or this evening, we have a bunch of Australian dollar news. We actually have an interest rate decision, the Reserve Bank of Australia rate statement coming around this evening. Obviously, what you guys see right here, actually, let me go ahead and change the time very quickly. Just log in real quick. Boom, and let's go ahead and change this time. We are plus 10. DST off. Let's go back to the calendar. Okay, so the times that you guys see on here are Australia time. So this is going to be Tuesday for me, Monday for most of you guys. But we do have some Australian dollar news coming up, so that is something to keep in mind. The rest of the week is pretty light. We do have Bank of Canada rate statement Thursday morning, Wednesday afternoon if you're in the States. And then, of course, on Friday, we do have non-farm payrolls. So I think our key risk event is going to be three things this week. We, of course, have NFP non-farm payrolls on Friday. And then we have the Bank of Canada rate statement and Reserve Bank of Australia rate statement as well, both this week. So keep that in mind while you're trading this week. Two interest rate decisions and NFP on Friday in combination with lots of other mild high impact news throughout the week. So looking at the dollar index to kick off our technical analysis for this week, I am looking at some possible, I'll just be straightforward with you guys. I am looking at some possible short-term weakening of the dollar index. I know last week we were bullish on the dollar, and that's actually exactly what we got. If you guys followed last week's weekly outlook and you use that our analysis in combination with your own analysis, you could have made some pretty nice money. We did see a pretty nice upside movement on the dollar index last week, and we're hovering back around that 93.2 level. If you guys are new, I'll just very quickly show you guys what this 93.2 level means to me. It is a major level, or in my opinion, it is a major level right around 93.2. You can actually see, I'll actually just change this. I always say 93.2, but it's, okay, so 93.2, you guys can see acted as major support back in, was that 2015? Yeah, 2015 a couple times, also throughout 2016 and a little bit in 2017 earlier this year before we broke through that barrier and then pulled back up above that barrier, back up into the 94, 95 region. And now we are back below the 93.2 level. So I will be watching for orders to accumulate in this area, and then possibly find a little bit of more downside. And we may find a double bottom down in this area before moving up higher. We could see some dollar strength towards the end of this year. I believe, I don't know if it's next week or maybe the week after, we do have a rate statement for the Federal Reserve. I'm going to do a little bit more research on it, but there is a very high probability that they are going to be raising interest rates in the States. Kevin, you're asking, will act as resistance now? I think so. I think this 93.2 level could act as resistance. I'll basically point out the two scenarios that I am looking at for this week, guys. So the dollar index, in my opinion, is going to do one of two things this week. The first thing, in the situation that I think is most likely to happen, is I think that we'll see a little bit of consolidation early week, and towards the end of this week, middle end of this week, we'll see a drop. Now, maybe not quite this big of a drop. Obviously, we usually don't see the dollar index make those kinds of strides in 1 week, but we may see the retest of last week's lows, maybe even a little bit lower this week. So that is scenario option A. Option 2, which I think is the least likely scenario, but could be possible, so I don't want to completely rule it out, is we could break back above this 93.2 level, retest this area, and then move back up towards the 94 level. So those are two scenarios that could happen this week, and I think but in my opinion, what is more likely is following this short-term downtrend that we've been in on the dollar index. And some people might even say this isn't necessarily the short-term downtrend. We have been very bearish on the dollar index. You guys can see this major descending channel that we've been in since the beginning of this year. Broke out earlier this year, a few months ago, had a very small uptrend, and then now we've broken out of that channel, not last week, but the week before last, and continuing to make our way lower. So as you guys know, pretty cliche saying, but the trend is your friend. Obviously, you have to understand the markets to know which time frame and which trend to be looking at. But overall, I think we are going to be trading with the trend this week and looking for some downside on the dollar index. So if we're looking for downside on dollar index, then that means that we're probably going to be looking at some upside on gold. Now, gold, it did follow our analysis perfectly from last week. We weren't very interested in trading it. We didn't pull the trigger on a trade. However, if you did follow our analysis, we've been talking about this channel for quite some time. Now, I personally was not interested in trading price inside this channel, but I did tell you guys yesterday or last week when the markets opened up around this area that we're probably going to find a bounce off of the 1300 level and then find its way lower. Now, my long-term targets on gold still are around the 1250, 1260 zone. Obviously, though, if we're looking at a weaker dollar, then we're probably looking at some strength in gold. And what I could see happening with gold is price making, maybe from this swing, maybe a 50% retracement, maybe somewhere up to this area before moving lower. So look for some potential upside on gold. Look for a possible bounce. We've seen some major resistance, support, all in this area, and also some current support in this zone. So I think gold definitely has the potential to even possibly retest the 1300 level once again before resuming this downtrend that we're expecting on gold, which we're also expecting some long-term upside on the dollar. So should be interesting to see what happens with gold this week. But again, I'm going to sit on the sidelines. I think that we're going to be going over a couple other setups that look to be a little bit better, like Euro USD. So Euro USD, I would be interested in getting in it I would. So yes, I would be interested in getting in a trade on Euro USD this week. I think some upside is on the horizon. Obviously, we are expecting some downside, or my expectations is downside on the dollar index. So that means I am looking for the upside on Euro USD. I will tell you guys right now, if this is your very first weekly outlook webinar, today's is not going to be super educational like some of them are. You know, sometimes depending on the time, depending on the way the markets are looking, I'm able to delve into a little bit of education on these weekly outlooks. Today is just going to be my technical analysis and my outlooks. So that being said, please, if you have some time, please go on to our YouTube channel. You can just search Positive Traders on YouTube and watch last week's weekly outlook. There is a ton of educational content on last week's weekly outlook webinar. I specifically described exactly how you can be a multiple 6-7 figure trader, winning 50% of the time. So if you didn't get a chance to watch last week's weekly outlook, please watch that. But Euro USD, I am expecting some upside. We are creating a little bit of a bull flag on Euro USD right now. I'd like to see this 1888 handle broken and then possibly a retest in this area before moving higher. So that's what I'm going to be looking for this week on Euro USD, is a break of this resistance, bounce off this resistance, and moving higher. If we don't get that and we start to see some downside, if we do see kind of this like support that I have marked off right around the 118.35, 118.36 handle, then we'll be looking for some downside. But to start off the week, I'm not going to be trading today over the next 12, 24 hours. I'm going to let the market price action form and then looking at getting some trades into Tuesday, Wednesday, Thursday. So let's go ahead and, or Monday, Tuesday, Wednesday, Thursday. So let's go ahead and jump into USD Swiss franc. So of course, if we're looking for some upside on Euro USD, we're probably looking at some downside on USD Swiss franc. Friday, there was some pretty nice price action on USD Swiss franc. We formed a nice tweezers tops in this area, nice little bearish confirmation, and we saw a nice drop in USD Swiss franc. This week, we actually saw a huge gap in the markets. That's actually another reason I'm not interested in trading at the start of this week. Major gaps to start off the week. We'll be looking for these gaps to potentially fill. Obviously not interested in gap trading. I never recommend gap trading. Gaps do not always close. And if they do close, sometimes they can take weeks, months, years to close, and that risk to reward that you're going to get on those trades is not going to be good. Huge caps all around USD pairs. Exactly, Brandon. Yeah, definitely a lot of things capping price for dollar cross pairs this week. So it'd be interesting to see what happens on USD Swiss franc, but we do have this pretty major level around the 93.2% retracement of our yearly high to our yearly low. We actually went all the way up to our 61.8% and then re-dropped down to our 38.2. I'll look for price to break below this area, probably accumulate some orders and then drop lower throughout the week. So, but as of right now, I don't like the way USD Swiss franc looks. I don't like how Friday we had such volatility and then we gapped. We had such a crazy gap to start the week off. So I'm not going to be interested in touching USD Swiss franc this week. I'm more interested on Euro USD. We didn't really get too big of a gap on Euro USD, and I'd like to see some upside just based on the way the dollar index looks. Pound dollar, not even interested in trading right now. We're just going to skip that pair. Pound yen, I do have a little bit of interest in pound yen. So Kevin, can you explain gaps a bit? Never heard you explain why they happen. So yes, I will very quickly explain why gaps happen. So gaps happen because the trading servers, so the brokers, the platforms that you trade on, that we execute trades on, or even the charts that we trade on, close over the weekend. Or most of them do anyways, or like 99% of them do anyways. Not many brokers stay over the weekend, stay open over the weekend. Now, the reason a gap forms is you have to keep in mind, guys, that these charts are telling you a story. They're telling you the exchange rate. This is every single time the markets move, it's because the exchange rate is changing. Either one currency or one economy is getting weaker than the other or stronger than the other. So that affects the exchange rate. So the reason the market's gap, so if you guys can see, for example, USD Swiss franc, the market's closed right here and they opened up right here. So we had a pretty big gap. All the gap means is that over the weekend, while the servers were closed, the exchange rate changed from here and went to up here. So by the time the server is open, this is the new exchange rate. So it's the same thing as saying, like, let's say, for example, the week closed right here, and then the next week opened up down here, right? Well, the markets were open during this time. The servers were open during this time. So we saw all of this. But for example, if you didn't see the servers open, then we would have seen a gap like that, if that makes sense. So Kevin, hopefully that answers your question. It's just because the exchange rate is constantly changing over the weekend. Banks are still exchanging money. The economy is still running. It's not like the entire economy shuts down over the weekend. It's just the servers that shut down, the broker platforms that shut down, the charting software that shuts down. So wherever the exchange rate is when the market's open, that can sometimes create a gap in the market. But no, it's just as simple as that. That's the only reason the market's gap is because the exchange rate changes over the weekend. So pound dollar, not interested in trading. Pound yen. This is a huge trade last week, guys. If you made some money on this week, I have to take credit where credit is due. And I told all of you guys last week that this was probably my favorite setup for the week. We were expecting some major upside on pound yen. I got tons of messages all over social media, people thanking me for the analysis. Pretty nice formations in this area. We had this super area of consolidation, sideways consolidation, and then we were expecting a move to the upside. And we had talked about last week. Again, if you guys don't believe me, please watch last week's webinar. It's recorded and on the YouTube. You guys will see I was very, very strongly biased to the upside. I told you guys that this was probably this and AUD USD last week, and among some other pairs were my most favorite trades for trading. One of the reasons is looking at history in the past. We saw some major consolidation before some huge upside on pound yen. Now, where do I think pound yen is going to go this week? I still think we'll see some upside on pound yen, but maybe not this week. I think we could find a retracement down to maybe like the 50% retracement level before moving up higher. We can actually mark off the 50% retracement level. That's going to be right around, almost got it. So right around here is going to be our 50% retracement level, maybe even back down to the 61.8% retracement level before moving up higher. Based on dollar weakness, we should see this pair find a little bit of resistance around this area, probably fall a bit before going up higher with our long-term bullish bias on the dollar. So I'm not interested in trading pound yen. We already had the trade to the upside on pound yen. I'm going to let the pullback happen and then reevaluate price. Again, my main focus is Euro USD, looking at that resistance breaking and then moving up higher. Dollar yen, not interested in trading dollar yen whatsoever. Going to skip over this as well. I told you guys, and if you guys have been on our premium webinars, which I do for my premium members every single Monday, Tuesday, Wednesday, and Thursday, Friday. If you're in Australia, do webinar 4 times a week for all the premium members. Go over the analysis, go over psychology, go over the education, really focus on educating you guys and, giving you guys as much value as I can. But at the 61.8% retracement level is when I would be interested in trading dollar yen again. Only if we get a break above this area would I be interested in trading this higher. But as of right now, completely on the sidelines, kind of like pound dollar, not interested in trading it whatsoever. AUD USD. AUD USD, we did take a little bit of a winning trade on this last week. Made about, I think, like 2% on a trade on this last week. Saw a pretty major pullback towards the end of last week. AUD USD, I'm not very interested in trading right now either. My long-term targets were a little bit lower, around 74. Looking at our second extension, so if we go ahead and mark off this extension, you guys can see our 161.8% extension level around the 74.50 area. We did see some downside on AUD USD last week. Again, our analysis followed through perfectly at the beginning of last week. If you guys traded this pair where we started at last week, we were expecting some downside on AUD USD, and that is exactly what we got. We got a small pullback, or actually a pretty strong pullback on Friday, and now we are reevaluating what is going on. We have a little bit of a double bottom forming in this area. So if we do break above this neckline, So we have a pretty major level of resistance, which is also previous support from this bear flag around the 76.40 area. Now, I'm looking for price to potentially break above this area and then maybe bounce off of here and then retest this major zone around the 77 level. At that point, we may find ourselves making another descending wave to the downside. But as of right now, if we're looking for some dollar weakness, we're looking for strength in Euro USD, then we're probably going to be looking at some strength in AUD USD this week. And we had a nice double bottom form towards the end of last week. So I think that's going to hint at some bullish momentum on AUD USD this week. So look for some upside on AUD USD. I think that these two pairs, AUD USD and Euro USD, both looking for opportunities for the upside this week, is going to be the most interesting setups. NZD USD, I'm not super interested in trading, but Friday we did create a little bit of a nice bullish engulfing candle. We saw the market's gap a little bit lower than where the week closed, so it'll be interesting to see where price goes, but very similar to AUD USD, where if we see some upside on AUD USD and Euro USD and we see downside on the dollar, that we're probably going to see some upside on New Zealand dollar, US dollar this week as well. So if you guys cannot already tell, for those of you that have been following along with my weekly webinars the past couple of weeks, is we are changing our bias on the dollar. We've been pretty bullish on the dollar recently. We've been looking for sells on Euro USD, sells on AUD USD, sells on NZD USD, buys on pound yen, which are all supporting a bullish bias on the dollar. And right now we are reversing that outlook and looking for sells on the dollar, and so that's creating buys for Euro USD, buys on AUD USD, buys on NZD USD. So that's my main focus this week, is looking for buys on those three pairs. And then finally, I'm looking for sells on USD CAD. We had a very, very strong bearish move on Friday with USD CAD. Huge bearish candle on the daily. You guys can see that pretty gnarly candle. So I'm going to be looking for some major downside on AUD USD. We do have some pretty, hold on guys. We do have some pretty major support right around this green zone, right in between. It's about the 126.75 area. It's halfway between 127 and 126.50. So about 126.75 is where we're looking for support to break. So look for a break, a bounce, and then it moving lower. But even the weekly has a pretty nice looking candle. I'll very quickly show you guys. Pretty nice price action now. One thing I do want to recognize on USD CAD is this bull flag. Okay, so I want to wait for support to break first. We need this support level that I just explained around 126.75. So if you guys have your trading journals out, please write that down. I'll go over the significant levels on Euro USD and AUD USD one more time before we wrap this up. But USD CAD, I am looking for downside, but wait for that support at 126.75 to break on the daily chart, and then look for some downside. But that weekly candle created a very nice exhaustion candle. So I think some downside is in order. Probably towards the 50% weekly retracement level. So let's go ahead and throw out this fib. Let's take this and let's mark that off. Probably this week we're going to find price move somewhere around this area. That's where I would forecast price at least to the 38.2% retracement level. But if we decide to find some more momentum, probably even lower. And so that 50% retracement level, obviously you guys can fib out yourself on your own charts on the weekly time frame. But just to give you guys, if you guys are just writing it down, it's about 124.92. We can round up. Let's just call it 125 even. So around the 125 area. So that's about 200 pips lower where price is, or about 175 pips lower from the support that we're looking at breaking. So some good opportunities, some nice opportunities to the downside if we can get that support to break. Now, if we do not, if this support on USD CAD does not break, and we see that these moves from Friday were false moves, and this was not the case of a weaker US dollar, and we do see the dollar continue to strengthen, we do see USD CAD break back up. If we see this resistance break, then expect some major upside on this pair. But overall, reacting to price action, reacting to the way the markets are moving this week, I am expecting some downside on USD CAD. So once again, guys, just to go over the most significant setups for this week, I need USD CAD to break 1.2675 for me to be bearish and take a sell on USD CAD. On AUD USD, I am looking for the neckline of this, call it a whammy W formation, whatever you guys want to call it, but the neckline that we have right here, which is also the previous support from this bear flag. So that's, we'll call it 0.7640. So the 7640 area, we're looking for the resistance to break on that and then move up higher. And Euro USD, we are looking for the resistance around this area, which is about the 118.90 area. Okay, if you want to be a little bit more conservative, you could just call it the 119. So once the 119 area is broken, looking for a bounce off of that previous resistance now would be acting as support and then moving up higher. So again, just to be very clear, my focus this week is for opportunities to the downside on the dollar index. Okay, so with the dollar index, if you're watching this week, look for an accumulation of orders before moving lower. Maybe not as low as I just drew, guys. That's just me drawing the line to signify that it's moving lower, but at least probably to somewhere in this area, retesting last week's lows or lower. All right, guys. So pretty interesting moves in the market this week. Be watching to see how things play out. Again, our prices have gone up in the premium group. If you guys slept on them, well, I gave you guys plenty of time to hop in at the current pricing. Even for the new pricing of what I'm giving you guys, averaging about 5% returns per month over the long term is worth tens of thousands, hundreds of thousands of dollars over the long term. So it's very affordable for in terms of investing. That includes the daily webinars that I do, the education, the pre-recorded trainings that I have, the new recordings that are being released, and of course, the signals and the trade copier access. So everything is included in our membership to our group. You can check that out on positivetraders.us. But other than that, guys, I'll keep you guys updated with trade ideas in Telegram throughout the week for the free members. Obviously, if you guys are in Slack, you guys will join me in about 24 hours on tomorrow's live webinar. Definitely going to keep following you. First webinar. Awesome, guys. Thank you very much. Brandon, do you do NFP predictions for high risk trade? Absolutely not, Brandon. I don't recommend trading NFP whatsoever. I mean, it's totally up to you. I mean, of course, if you have the capital to, maybe load a small account and do high risk, but here's the thing is trading is all about psychology, guys. It is staying disciplined and staying to a strategy. The worst thing that you can do as, maybe someone new to Forex or somebody that's been in Forex for a little bit is have a really big winning trade using high risk. If you make a ton of money in a very short amount of time using high risk, in your mind, that's you're automatically going to assume that it's consistent, that it's possible. So I don't even really recommend going and trading a small high risk account, because if it does so happen that you profit a lot, then that's going to get you in the mentality of going high risk, that it's possible to make, use high risk all the time. And it's going to kind of like give you like quote unquote hope of trading high risk. And that's just not the way Forex should be. Any type of investing should be. It should always be low risk. So I don't touch NFP. I don't make any recommendations on NFP. It's just something I do not do, guys. So I stay very disciplined. I use the same strategy all the time. So we'll sit on the sidelines. If you guys are in the premium group, do not expect any trade calls come Friday or any trade calls regarding the dollar, which just so happens that most of the pairs that I trade revolve around the dollar. So watch the markets this week, guys. If you have any questions, please feel free to reach out to me, Slack, Facebook, Telegram, Instagram, wherever you guys follow me. But lots of value getting thrown out this week. Telegram is going to be updated pretty consistently with trade ideas. Of course, Slack, expect a bunch of signals this week. We're going to be getting in. I think the market is going to give us some good opportunities to get in pretty good fair amount of trades before non-farm payrolls in Friday. So let's focus on the risk management, focus on our risk to rewards on our trades. Every trade you're taking should at least have a 1 to 2 risk reward. So what that means, guys, is if you're placing a trade what a 1 to 2 risk reward means is you should be risking half of what you're trying to make. So if you're risking 20 pips, you should be risking 20 pips to make 40 pips. You shouldn't be risking, whoa, what just happened here? Hold on, guys. Let me go do a different pair just to give you guys an example. Let's do this to this. So let's say you're doing risking 20 pips to make 40 pips. Okay, so that is an example of good risk to reward, guys, where if you're going to enter a trade, okay, let's say you're going to enter a trade that you have your stop loss half the size of your take profit. Okay, if you can consistently average a 1 to 2 risk to reward on your trades, then this is how you're going to be successful long term. Okay, if you're risking 20 pips to make 5 pips, okay, you're doing something like this. Okay, that is about a risk to reward. All right, if you're allowing this much drawdown to make this much profit, you probably aren't going to be successful long term. Okay, because one losing trade is going to wipe out all of your wins or 4 of your trading wins. So make sure you have good risk to reward on your guys' trades. Other than that, that does it for today's live webinar, live weekly outlook. I'll go ahead and upload this to YouTube. If you're watching the recording on YouTube, please leave a like, thumbs up, comment. If you guys did like this, subscribe so you are notified every single time. We're about to hit our 1K mark on YouTube. So thank you guys for all of your support. Been given a link from a friend just recently. Awesome, guys. Share the group with each other. My main focus is teaching the right thing, teaching the psychology, teaching the mindset, teaching the right thing. What are the prices, or have I got a website? Absolutely. Yeah, I definitely have a website. It's going to just be right here, positivetraders.us. So if you shoot over to our website, you'll be able to come on here and see everything that we have. Awesome, Kevin. Yeah, Kevin posted it also in here. So we've got in here, you can click register, and then we've got all of our pricing down here. It gives you a little bit of background on what we do. You can learn a little bit about our team, who we have on the team, what we're doing. We have our track record right here. You can see everything. You can see that we're a fully licensed business. We are registered out of the state of Arizona in the U.S. We've got a whole frequently asked questions. You can contact us down here. But full website. You can also create a free account. I've got some goodies back there. If you log in, there's a bunch of free things for you guys. We've got a Forex survival guide in the back. You have access to our Telegram. So lots of free value if you guys are in our free group, and even more value if you're a part of our paid group. So free members, thank you guys for being on here. I'll catch you guys on next Sunday's live weekly outlook. If you guys are on here and you're a premium member, I will see you guys tomorrow for our premium live webinar. So thank you guys. Appreciate you guys' time. Have a great week, and take care, guys.